We're going to change track totally today in this session, and want to bring in the concept of the land sector to introduce land as an asset class, more specifically sort of around forestry or agriculture or bonds, for example, but then also to really explore the area of climate change risks and opportunities in the land sector more broadly that might be across our portfolios. For LGS, both have had a lot of interest. We've done a lot of work on, I suppose, driven by the lure of the beauty of a real resource like forestry and agriculture. Sustainably managed forestry having significant benefits both environmentally, but also community and its ultimate service as provision of key food and resources for our societies. So very much an impact investment, and indeed with the development of the Sustainable Development Goals, you're really getting a very strong framework upon which you can start to patch those sorts of things into your investment approach. But then from the portfolio perspective, we've also been interested. LGS was an active voice, shall we say, in the position around guns many years ago and its forestry practices down in Tasmania that eventually saw it go bankrupt. And, we all have concerns when we see things like Samarco with BHP, for example, problems with land use and the implications of what happens to companies when they misuse the land and the common use of land and the impact that can have on your portfolio. So we have three great speakers to discuss this more, and this is really just a scene-setting exercise that I'll introduce later. But in terms of setting the scene, the important thing is that we have a toolkit that's being launched today. Now, this is a new area. Connecting carbon commodities investors and the land, it's a first step in this process, and it's really just, as I said, an eye-opening exercise for us all, which I hope you will see has really quite significant issues, because not only are these deforestation issues, but they're also huge climate change issues as well. The report has been its first time issued here, but it's also going to be the key plank for the IGCC's sister organisation, the Asia Investor Group on Climate Change, as a rallying point for discussion around the materiality of climate change issues there. You see, of course, a lot of issues, for example, the peat fires in Indonesia and the health and societal impacts that has across the region and in Singapore, makes it, both a climate change issue, but very much a day-to-day and significant and real living issue for people in the region. So we feel that this is going to be a very important way of getting traction within the Asia investor community. So the report covers three major areas around policy landscape, financial risks and investments, and also what other tools and resources for investors. So moving on there, just some snapshots of the report. The report is, I believe, outside, or will be, if not, or online, sorry. Really should get onto my youthful way. Yeah, so online indeed. So look, we're looking mainly at four main commodities here. Palm oil, soy, beef, and paper and pulp. These are the main areas of concern in the area. Significant deforestation areas, really Indonesia. I mean, the region in itself and of itself in entirety is significant, but really significant issues for Indonesia, so you have investments and opportunities there. This is a focus of it. But also not just the deforestation issues, but up to 25% of the world's CO2 emissions are coming from these areas and these sectors. Looking at the policy position, it's not just Asia. I mean, it's interesting with Australia, where we've had great sessions and continuing great sessions on the electricity sector and what we're going to do in there. But if we look at Australia, we are a major agricultural exporter, 17% of our exports, and about 18% of our emissions are in agriculture as well. So that idea of decoupling CO2 emissions from a sector is very much relevant here. And look, we do have some policy things in place, but I think there's a hell of a lot more discussion that we can have there. New Zealand's even more significant. It is, agriculture is the most significant part of the New Zealand CO2 emissions profile, and again, Clean Green New Zealand, a huge part of their exports as well. So this is a very tangible and real issue. Moving across to Asia, I thought this was pretty interesting from many perspectives. So we've got the commitments of 7 countries here. One, we see they all have very large emissions, and a lot are coming from the agricultural sector. Now, what is really, I think, also interesting is that, well, all the countries have a strong Paris commitments, and big part of those Paris commitments are what they're going to do around land use. So this is really getting very relevant and pertinent from a policy perspective indeed. And indeed, there's sort of dotted lines at the bottom there in terms of international support. So, as international and institutional investors, that might create opportunities for us as well. The toolkit then goes on to looking at financially material business risks and gives some great stories about Nestle's and orangutans and reputational issues, and it gives a sort of, not just around that, but they're pretty strong case studies that it's developing a framework that most institutional responsible investors will be knowing about in terms of risk and how you look at risks in the sector around operational, regulatory, litigation, market risk and reputational risk. And it starts to really showcase some of the emerging opportunities that we're seeing there, that we're seeing across, say, forestry bonds issued by the IFC. So if you're interested in green bonds, that's a great area. Public sector, private sector, sort of blended capital opportunities. And then, as we'll talk a little bit more about later, is specific investments in agriculture and forestry. The report then also goes on to standards and certification schemes that investors can apply for all of those 4 key commodities. There are sustainable roundtables. So you probably might be familiar with the roundtable on sustainable palm oil, where there's ones for soy and beef and paper and pulp as well. And that's only to name just a few. So there are tools that you can start to use to get it if you are interested in that, and indeed an increasing amount of civil society initiatives too. Next step for investors, well, these seem to be very sensible steps because they're the sort of steps that we have to apply across everything that we're looking at in terms of climate change and responsible investment. So building capacity, the toolkit is a great example and first step in that, discussions around it. And then, of course, investing, engaging, collaboration, and, of course, disclosure. So there it is. The toolkit is launched. So congratulations. We've got Corey Watts, the actual author of the report, is in the audience with us today. But now I'd like to really put a bit of meat onto this discussions with some comments, opening salvos from our 3 distinguished panelists here. We've got, do we have the names? Oh, yes. Ooh. Okay. So the first one we have is Beth Delaney. She's the Assistant Secretary in the Finance and Ag and Agricultural branch of the Department of Foreign Affairs and Trade, and we'll pass it on after that to 2 practitioners, Tony Lovell and David Brown. They'll speak for about 3-5 minutes, and then we'll just start going for some Q&A after that. Over to you, Beth.
Thanks very much, Bill. Hi, good afternoon, everybody. Look, because it's the first time I'm taking the microphone, I just would like to acknowledge the traditional custodians of the land and pay my respects to their elders past and present, and extend that respect to other Aboriginal and Torres Strait Islander people present today. I was just going to talk sort of probably quite quickly about 3 kind of key areas. One was just around the policy framing within which I suppose a lot of the work that my branch does sits. I wanted to talk a little bit about what we see and where we're trying to progress with the private sector, some of our initiatives, and then also just specifically kind of mention a couple of the things in the land sector or in the agricultural sector, but happy to kind of extend on some of that later on. For those of you who aren't aware, the Department of Foreign Affairs and Trade is the lead agency managing Australia's international presence. So we have a network of 100 overseas posts in 5 continents. We do a breadth of things: humanitarian crisis response, we assist travellers overseas, promote trade investment, and so on and so forth. One of the other things that we do is we manage Australia's aid program on behalf of the Australian government. In 2017-18, that aid program was worth around $3.9 billion. And about 16.6% of that went into kind of building resilience in developing countries. So that includes things around climate change, about 9% into agriculture, fisheries and water work. So climate change finance forms a really important part of our aid program, and it's firmly in our national interests. Obviously building resilient infrastructure, ensuring affordable, reliable energy, ending hunger, promoting improved land use and agricultural production all help achieve sustainable growth in the region, and that's good for Australia. So our development priorities are guided by the 2030 Agenda for Sustainable Development. So a number of speakers have talked about the Sustainable Development Goals. There are actually two elements to that. There's the Sustainable Development Goals, and then there's the Addis Ababa Action Agenda, which is the financing element of the Sustainable Development Goals. So, so we like to talk of there's no September without July, because July occurred in the Addis Agenda occurred in July, and that then led into the kind of September agreement around the Sustainable Development Goals. So they're a set of social, economic and environmental development goals that apply to both developed and developing countries, and climate action, which is SDG #13, and ending hunger, which is about, which also includes promoting sustainable agriculture, #2, two of the goals. And they kind of sit with the Paris Agreement, I suppose. They also sit with the Sendai Framework for Disaster Risk Reduction and the World Humanitarian Summit Action Agenda. So there's a framework, I suppose, within which we're all kind of working. So I suppose that's the kind of policy agenda. In terms of then how we are thinking about implementing it, I think, as I've mentioned, the Addis Agenda is sort of about financing that, and I think we recognise that meeting those goals is going to require huge long-term investment in the trillions, and that will need to come from the private sector, trade, donors, but also the mobilisation of domestic kind of resourcing. So it's obviously going to be, private sector financing is going to be crucial, but also the way that the private sector invests, and that is around sort of socially responsible, sustainable investments. So our key focus is on investment in developing countries, but I think the messages are equally relevant to Australia and other developed countries. So just a couple of examples. At the Paris conference, Australia committed to provide at least $1 billion over 5 years to support climate action for developing countries and to catalyse private investment. As part of that, we're developing a $16 million Indo-Pacific land action package to strengthen land management and fund public-private sector partnerships. We're also, as co-chair of the Green Climate Fund, actively promoting the private sector engagement, including in the land sector. And an example of that is a $20 million US dollars that we're giving to the Low Emissions and Climate Resilient Agricultural Risk Sharing Facility, which is a bit of a mouthful, in Guatemala and Mexico to leverage financing from private sector companies, financial institutions and equity funds for climate smart agriculture. And you'll notice when you do get to the toolkit that there's one of the companies that's highlighted as part of that, Athenia, is a big investor in this area, and we're working with them on that particular program. We're also doing stuff in relation to deforestation, including the principles for responsible agricultural investment, and so I suppose one of the other key areas in terms of agriculture, to put it in context, 800 million people in the world, of the world's poor, that's about 80% of them, live in rural areas, and so they're heavily reliant on agriculture. And so we're trying to think of ways to, I suppose, meet the increased demand for agricultural produce, which is likely to depend on improving infrastructure and strengthening risk mechanisms to help farmers and investors hedge against risks inherent in that agricultural production chain. So So a number of areas that we're working on there is around supporting initiatives such as Grow Asia, which is a partnership between the World Economic Forum and ASEAN that looks to bring agribusiness investors, farmer groups and governments together to unlock investment opportunities in agricultural value chains, which I know is an area also that the toolkit highlights. So I'm happy to provide other details and examples, but I just wanted to finish on another kind of, I suppose, a policy area that we're trying to implement and bring things together, and that's there's been a bit of discussion around the impact investing space, and that's another area that my team is really looking quite closely at, and that is how do we find ways to de-risk the investment for private investors to come in and support particularly the work that we do in emerging markets, but in developing countries writ large, and so my team's been working on quite a number of different initiatives to work out how best to do that. Some of them are in the kind of emerging markets sort of trust fund type, investment fund space. Some of it's just about building partnerships with the private sector to try and look at ways that we can co-design investments. So we're working, for example, with Intrepid and AVI in Myanmar. So I think we're really trying to think through what is it that investors actually need, and what do they what drives them, and what do they how can we work with them to look at responsible investment. So I might leave it there because I'm pretty sure I've spoken a bit too long.
That's fine. Thanks very much. Next speaker, Tony Lovell. Tony, you've got slides.
I got slides.
Yeah. Don't ask me how you use the blinker, but Tony's the CEO of Sustainable Land Management Agriculture Fund.
Thank you all. I'm very much into the glasses on phase with the advantage of large font size. So here we go. Okay. I run SLM, which Sustainable Land Management. So reasonably relevant for this topic. Why agriculture? Why are we involved in this? In climate change, we're talking about fossil fuels, energy generation, etc. To me, agriculture should be the art and science of promoting life so that we can harvest some of the surplus for our own use. Okay, so it's an art and a science. Life's based on carbon, and agriculture is based on life. So agriculture is the active management of carbon. What we do every single day is actively manage carbon cycles. All right, now I find lots of things interesting, but when it comes to sustainable land management, two things stand out. First, the number of people who think we need to choose between feeding the planet and saving the planet. Secondly, that nature's actually on our side. If we stop fighting her, she'll do most of the work and she has lots of zeros. Now, if anyone here is genuinely interested in sustainable land management, grab your phone now and take a photo of this slide. Okay? That, to me, is proof we don't need to choose. We can produce food and fibre, we can mitigate climate change, and we can generate solid and stable returns for investors. Okay, so what is it? It's a photo of a wheat crop here in Australia. Okay? All the plants are the same variety of wheat. They were planted on the same day by the same farmer sitting in the same tractor. But it's pretty obvious that it was an below average rainfall year, but you can clearly see that some of the plants didn't get the email about the drought. Okay? So what caused a narrow strip of strong, healthy plants? All right, you've got 10 seconds to talk to the people sitting beside you about what you think has happened here. Your time starts now. We're active here, come on. What happened? All right, that's it. Time's up. Time's up. I'm on a tight schedule here. All right. Now this next graph looks a little bit busy, but it's really very simple. On the left axis is how much artificial nitrogen fertiliser you need to apply per hectare to get a given crop yield, and across the bottom axis is the soil quality, as indicated by increasing soil organic carbon levels. So if you follow the yellow line, from left to right, you can see that you need to apply less artificial fertiliser as the soil gets better, which makes sense. Okay? But for the past 10,000 years, humanity hasn't really improved soils, we've degraded them. So if we flip them around, the thing looks a little bit more real. Okay? Again, follow the yellow line. When we first plough land, we always start with good soil. Why plough up shitty soil? Okay, so we always start with good soil. And for a while, we can grow a good crop without needing any artificial fertiliser. But as we degrade the soil, our yields fall. So we put some fertiliser on, the yields go back up again. But we keep doing the same thing, so the yields drop again, so we just put some more fertiliser on. Okay, this cycle continues, and every year we just put more on and more on. And we're now trapped in the downward spiral of more on farming. Okay, so most agriculture is more on farming, we just more on and more on and more on. Okay. Now, this has two serious implications. First, it's expensive. Nitrogen fertiliser costs about $1 a kilogram. So we're locked into spending about $100 per hectare year after year after year. Second thing, and far more worrying, what happens when we hit the brick wall of zero? Okay. We abandon the agriculture, we move on and we start somewhere else. We are doing really, really sophisticated. We're doing basically slash and burn agriculture with iPhones. That's all we've done. Okay. But plants need nitrogen to grow, don't they? We must use fertiliser. They can't just get it out of thin air, or can they? The air we're all currently breathing is 78% nitrogen. Okay. And yes, Nicolette, I have got a photo of a cow, so covered that. So how much is up there? How much does that mean? If the 78% of what we're breathing is nitrogen, what does that mean? Okay, a few numbers. So 1 atmosphere is 10 tonnes per square metre. Okay, air has mass, that's why wind turbines turn around and why trees blow over. Okay, so that's 10,000 kilograms per square metre, of which 78% is nitrogen. Right, a hectare is 100 metres by 100 metres, so that's 10,000 square metres. So if we've got 10,000 square metres and 7,800 kilograms per square metre, we've got 78 million kilograms of nitrogen sitting above every single hectare. Okay? And from the previous slide, you'll recall that we put on about 100 kilograms a hectare. All right, so we've got 1 million years worth of nitrogen sitting above every single hectare, free nitrogen, but we get somebody with a truck to back some more on. Okay, some more on farming again. We pay $1 or more per kilo for that nitrogen, which means that while we have $78 million worth of free nitrogen sitting on top of every hectare, we send money to a fertiliser company. Okay, seems a little bit strange. Now, unlike us, plants don't have legs, so we're going to go and have lunch soon, so we can go and get a bit of salad from here and a bit of fruit from there. Okay, but plants can't do that. So how do they get the minerals and nutrients they need? All right, sorry, go back. All right, that's underground. That shows the underground development of roots on a pine tree. There's a little pine seedling in the middle. Okay, now the plant roots are only the little brown bit down the middle. All the white stuff there is a thing called a mycorrhizal fungi, which is a mutually beneficial relationship with most plants. Okay, the plants produce sugars and exude up to half of them out of their roots to feed all the soil life. Okay, the soil life in return captures nitrogen from the air and extracts minerals and nutrients from the soil and feed the plant. Mycorrhizal fungi can increase the surface area of the soil that a plant can access by up to 10,000 times. Okay? Normal industrial agriculture destroys mycorrhizal fungi. Okay, so I haven't forgotten. What did actually happen here? That used to be 2 fields separated by an old fence line where the dark green strip is. The farmer had just pulled out the old fence and planted over what was effectively virgin soil, soil that still had some decent biology alive in it. Okay? Healthy soil means healthy plants. Healthy plants mean healthy yields. Healthy yields mean healthy profits. How will we know if we are truly sustainable land managers? When we can profitably produce food and fibre from this field for the next 50, 100 or 500 years, but we can't see that dark green strip. Not because we've degraded the middle down to meet the sides, but we've regenerated the sides up to meet the middle. Agriculture now occupies over 40% of our planet's land surface. We need to do agriculture sustainably, and we need to do it at serious scale. Together we can do this. We can produce food and fibre, mitigate climate change, and generate solid and stable returns for investors. We have the knowledge and we have the skills. My role is making it happen on the ground. Your role is providing the capital that it will take to do this at a scale that works socially, ecologically and financially. Thank you.
Thanks very much, Tony. Our last speaker is David Brown, CEO of New Forest Sustainable Forestry.
Okay. Thanks, Bill, and thanks for the invitation to be here with you today. It's great to be here. And it's also great to see us include land use and agriculture and forestry as a panel in the conference today. It's a really important issue, and I also congratulate the IGCC for releasing the toolkit on climate change in the land. I think it is an important area that's really been below the radar in terms of investors to date. And you know, as we've seen, I think during the course of Bill's introductory remarks, forestry, agriculture, land use is really the second most important source of greenhouse gas emissions worldwide, and yet it hasn't had anywhere near the level of attention that we've had in terms of the transition to renewable energy. So I think this is a second key area that investors should be looking at in terms of addressing climate change risks. Well, as Bill said, I'm the founder of forestry investment management business New Forests. We started the company in 2005. From the very start, we wanted to build a business that operated at the nexus of the forestry asset class and the climate change issue. Forestry is both a net carbon positive asset class, but also can be a source of renewable, recyclable materials, can also be a source of substitutes for fossil-based energy, fuels and materials. Our company today now operates in 6 countries. We're in Australia, New Zealand, Indonesia, Malaysia, Laos, and the United States. We manage about $4 billion of investments in forestry on behalf of large pension funds, reinsurance companies, medical benefits trusts. We have about 800,000 hectares of land and timber plantations. We also operate conservation management areas, sawmills, and infrastructure. And we're one of the largest providers of forest-based offsets in the California carbon market. We're the largest forestry investor in Australia, and we've launched the first fund for sustainable forestry for institutional investors in Asia. So, you know, we've worked with our clients, I would say, over the last several years to help them in terms of their portfolio objectives, particularly in the last couple of years, is trying to link these large international institutional portfolios to the Sustainable Development Goals, to the Paris Agreement outcomes. And so for us, you know, we're not only presenting financial accounts to our clients, but also carbon accounts and other sort of sustainability indicators that come out as a kind of a comprehensive landscape performance measurement system. And I think that forestry does have a lot to contribute to climate change and to sustainable development. There's already over $100 billion of institutional investment in forestry worldwide. That's steadily growing. There's enormous opportunities at the moment. We're seeing a rapid increase in multi-story buildings made from engineered wood. We're seeing significant substitution of cellulose-based fabrics and sanitary materials, new materials like bioplastics and high-density energy pellets that are all proliferating in terms of trying to make a transition away from fossil fuels, petrochemicals, and so on. So just to close, a couple of thoughts on forest sector policy settings. Our view is, firstly, we need to protect and conserve our remaining natural forests. Secondly, we need to plant more trees and increase timber production from sustainable plantations. Thirdly, we need to reduce uncontrolled fires, particularly in Asia. And lastly, we need to increase the use of wood in long-lived uses like buildings. And you know, finally, I think we also need a carbon price signal that can help support these policy objectives in the same way that we had a renewable energy target or feed-in tariffs that drove the transition in the energy sector. Thank you.
Thanks very much, Dave. We've got about 10 minutes for time. I've got a few questions, but I think I prefer just to open it up to the audience first to get your buy-in and capacity. So any questions? If not, I'll take over. Okay. Michael Salvatico, MSCI ESG Research.
SLM partners, who are your clients? How big is your business? I mean, it sounds like a fantastic solution that you have to the food problem.
Actually, that was one of my questions. So, and I wanted to ask it to both David and Tony. So it's a very good question, Michael. But it is, from LGS's perspective, we've met both of you guys over time. We've been interested in, you know, your approach. It's, you know, I'm sure everybody thinks it's very interesting. Combined, you've got over $4 billion worth of investors. Where are they coming from, and what sort of, you know, what have been the challenges in getting Australian investors involved as well?
I'll Thank you. That's very generous of you saying combined we've got $4 billion worth of investment, because he's got 3.9 of it, which is good. But I'm in the list, so that's okay. Look, I've sat in, sort of in the last probably 8 or 10 years, I've sat in front of a couple of $1 trillion worth of investable capital. It's a different space. Most agricultural investments are presented as, let's go into the Brazilian Cerrados or the Argentinian Pampas, and let's take a couple of big yellow tractors and some big green things and have lots of soybeans planted. And we're saying we're going to do something nice. So it's not what they're expecting. The investor we've got is a Danish pension fund, long-term, steady, committed to the process. So that's the thing. So there's a lot of people, we're right at the leading edge of this process in terms of getting institutional investment into it. We've had a couple of meetings, as Bill said, with LGS and a few other Australian institutions. And it's just a case of the leading edge and the bleeding edge stuff. The process works. The agricultural management we're talking about, we can and we are doing that. The question is, we're doing it globally in small areas. It's proven technology, proven approaches, it works. It's just a case of getting the support behind it. No, it's not a process. It's a way of managing. It's just what we do is we actively, so for the Danish investors, we bought land. So we bought about 1 million acres of land in Queensland, New South Wales. We put the water fencing infrastructure in. We physically move the cattle around. We're producing large quantities of high quality, low cost grass-fed beef into the commodity market. I'm not overly excited about premium Wagyu, premium this, premium that. We're talking about doing stuff at scale and meeting the market need for most of the market, and being able to do that economically and positively.
Dave.
Okay, well, our clients are, I think, 70% defined benefit pension plans, so they can look at very long-term liability matching, and so things like forestry, agriculture, real estate, which have good long-term steady fundamentals, are seen as quite attractive. We also have a large reinsurance company, medical benefits trusts, one of the big Canadian funds, and so they're all kind of looking at sort of long-term exposure of maybe 10, 12% of their portfolio into real assets, with maybe 1, 2, 3% of that in forestry.
So it'd be right to say that most of your investor base are offshore. What do you think is holding back Australian investors investing in forestry and agriculture?
Well, we've talked to a number of Australian funds, including yours, and I think generally speaking, you get different answers why forestry is not so interesting. I think forestry is maybe seen as an illiquid asset, and many of the Australian funds are defined contribution rather than defined benefit, and people have high portability, so it's harder to take large allocations to illiquid real assets. I think there's been a view that when funds have a small proportion of their allocation that can go to illiquid assets, and they're putting them in things like private equity and things that are going to drive a higher return than what forestry will give. So I think those have been sort of the main reasons that we haven't seen a lot of forestry investment from Australian super funds.
Okay, thank you.
From our perspective, in terms of the agricultural side of it, I think step one, you've got to have a fund. The investment committee has to have had a bucket that they're going to put this stuff in, and it doesn't go in. It's trying to find somewhere internally for it to fit. Step one. Step two, I think Australia has a reliably unreliable rainfall pattern. That's just what we have, and I don't think our rural press does investing in rural any favours at all, because it's always, oh woe is me, oh woe is me. Okay, so the story that gets told to the cities is just devastation followed by devastation. It's not easy out in the bush, but it's nowhere near that tough.
Great. Look, I'd just like to ask Beth a couple of questions. Well, a double barrel, and then I'll go back to the audience because we've just got 5 minutes. But this impact investing and enabling and getting private sector institutional investors, what do you think's the next step? And can you also talk to me a bit about, you're talking about some female empowerment roles and how it's not just, about agriculture, but the community aspects of what you're doing?
Sure. So I think on the impact investing, I think what I was trying to say there was that, you know, we're trying to look at opportunities to build in that space. I suppose my view is that internationally there's quite a lot happening, but maybe a bit like the forestry sector, sort of Australian investors aren't interested or aren't quite sure how to tap into it. And so I suppose we're trying to look at ways to do that through some of the big institutions that we are members of, be it the World Bank, be it the Green Climate Fund. So that's one element, but we're also working a lot with some of the big philanthropics, so Rockefeller, Bill Gates, Bill and Melinda Gates Foundation and so on, to try and look at how we can find ways to, I suppose, move from the CSR kind of approach to investment, so corporate social responsibility stuff, much more into the, well, actually, we want to have social outcomes, we want to invest in ways that look to social outcomes. So that we're just trying to explore ways that, you know, the Australian government can use its grant financing to leverage in private sector investment towards those social and environmental outcomes and programs that deliver those outcomes. And the one I mentioned in Guatemala and Mexico is an example of that, and that's ready to go. So if you're an investor out there interested, that's ready to go. I think on the women investment, so we do have something called Investing in Women, which is about it's driven by a desire to increase women's economic empowerment internationally and in developing countries, and it's very much focused on, I suppose, building the capability of women's small to medium enterprises, and then finding investors who are willing to invest in those. So there's those elements. I think we've been looking at some of the programs that we do. For example, one called AgResults, which is actually a pool mechanism based approach. So that's actually looking at delivering on kind of results. We set the challenge, the development challenge, and then how you deliver that is entirely up to you, and we'll deliver on the results. So I think it's just using some traditional kind of financing mechanisms that I'm sure people in this room are much more across than I am, but to try and deliver better development outcomes on the ground.
Fascinating. It sets up some interesting impact models for us to look at. I think we've got time for one last thing from the table. From the audience, actually.
Sorry, Bill, if I can make two comments just while we're waiting for the microphone to get there. Number one, on impact investing. Every investment's an impact investment. I mean, it just is. Whatever you do, just don't pretend that when you're investing now, you're not having an impact. It's either good or bad, but you're having an impact. Second thing, the interesting point in terms of defined benefits. David said 70% of his money is coming from defined benefits funds. Our investors are a defined benefit fund. Long term, if you're going to get into this space, you look at what happened in 10 years and 20 years' time. You don't look at it on a quarter-by-quarter basis. If you haven't got that headspace, stay home.
And I think a lot of that happens in the infrastructure space. So, you know, so why is this so terribly different?
Great, thanks.
So it's Gordon Weish, Managetics. It's very exciting about this because I think there's tremendous opportunity for the nation in land-based sequestration. But one thing I wonder is that whenever, in the Australian context, whenever you see the words investors and land together, you immediately think of Great Southern Plantations and Timber Corp. And so that we've got a challenge to overcome that history and move forward. I'm just wondering if the panel have got any comments about how we do that.
Dave, that'd probably be a good one for you, mate.
Given that we bought all the Great Southern Plantations and we also bought all the assets of guns, I think it's a very interesting story, frankly. We took over. We don't use debt. We pay our bills on time. Everything that we acquire is put under FSC management within 18 months. Every hectare of natural forest is put under conservation management. We invest in our assets. We are not limited by capital expenditure. And we make great returns and good, strong cash yield. And it's just, you know, putting the fundamentals to work and having the capital base and the right form of capital to support the forestry sector. And I think that's what we have now.
Now, yeah, for my sins, I'm a chartered accountant, okay, so dealing with that stuff. Anybody who invested in Great Southern and those things got exactly what they wanted, which is a tax deduction. That's what the whole thing was driven by. That's what they got. They were not forestry investments. They were not agriculture investments.
That's great. So that's it for time. Look, I'd like to thank all of our three panellists for this very interesting session. Thank you.